What does tech look like to you right now? Something you want to get in on before it magnifies even further? Or is this a little bit of kind of sketchy territory? What do you think?
No, I hope people are already invested because also last year it was a main driver of performance. And I think that pattern in the market will stay. We do forecast lower growth. So far, everyone talks about the strong growth in the economies, at least in the US, not so much in Europe, obviously. But if growth is coming down, then market will continue to look at those companies, sectors, which are delivering growth. And I think that's why this diversion in the market of growth companies being super strong and the others a bit weaker, that can even be stronger this year, I would say.
Does that then put valuations into perspective, though? There was a question mark from Dan Ives over at Wedbush, a tech analyst that we follow very, very heavily, actually saying that if you don't buy into this market right now, it's basically FOMO. It's like not investing in Facebook back in '08 when they IPO. But then so many people would say, how much further can this rally go? I'm curious, what is the game changer? What is the straw that breaks the camel's back here?
Yeah, I think FOMO is not a good advisor, I would say. And we have seen something like FOMO really, I think, in Q4 last year, especially in December, there was a lot of FOMO investors, if you want. I think what the market needs to get is probably in the next weeks, maybe after the earnings season, kind of what I call a reality check. So as I said, we see growth coming down a little bit. The market is pricing a lot of rate cuts from the central banks, so Fed 6, ECB 6. We think it's probably a bit lower, so rather in the area of 3 cuts. And that could be creating some more volatility on the equity market, which has been really, very, very low. But I think if we see a slight correction in the market, that could be an entry point. So you don't need to have this FOMO at this point in time, I think.
Okay, so we might see some volatility coming. Christian, good morning to you. I wonder what this focus on tech and the way that tech has dominated the strength in markets of late, what does that mean for Europe and what will it mean for Europe, Christian? Are you forecasting that we enter a period where the performance of these markets broadens out or stays quite narrow?
Yeah, as I said, I would say where you have growth, there is performance, but that means for me that the market would stay quite narrow. What does it mean for Europe? Your other question, I think, of course, Europe is not as tech heavy as the US. So there are maybe other areas which are quite interesting. What we like about Europe is the consumer. Now, that could really improve. Was not very strong in 2023, but we think it could improve because we see an area or a time period of real wage growth in Europe, which is quite rare. And from that perspective, especially on the consumer discretionary side, we think that's where something in Europe could go quite well, also in a narrow space. But we like this quite a lot.